Thank you very much.
Are you tired? A bit? A little bit. Okay, we have our last closing keynote. It's a shame that everybody gets tired so much because he is the vice president of Nasdaq. And for me, his presence here is very important. First, because of our hashtag, no fear, because we all suffer of that fact. And second, because it's important that Nasdaq is looking at that part of the world, sharing knowledge and sharing thoughts on how a lot of companies can grow bigger. So I would be happy that you stay and ask questions, because this is our last keynote, and then we can continue together. You know that tonight there is a big party. Don't miss the party. It doesn't matter how tired you are. You have to be at Kurum Çeşme. I think this is the right way to say it in Turkish. Look at your badges. It's written there. And join us there. But now, please give a special and very warm welcome to our last speaker. Please join me on stage. Yeah, this is your, yeah. Thank you.
So thank you all. I understand that I am standing between you and the bar, so I will go quickly through the presentation. But it is great to be here in Istanbul. Just thought I'd give everybody kind of a brief update on Nasdaq and where we are. You know, Nasdaq started in 1971. We were the first electronic stock exchange and to really pioneer electronic trading. And now, if you look around the world, exchanges around the world use Nasdaq technology. We run 80 exchanges around the world, and we actually have a very great partnership with the Istanbul Stock Exchange, which is another great reason for me to be here in Istanbul. We also have a great group of companies. You know, Nasdaq's only been around since 1971, but we're proud of the fact that the largest companies in the world, Apple, Google, Microsoft, are listed on Nasdaq. We also have a great diversity of companies listed on Nasdaq, so we love our tech companies. We have great companies like Starbucks, Whole Foods, Costco, and other great consumer brands. In the U.S., we compete aggressively. We have two markets in the U.S. There's Nasdaq and the New York Stock Exchange, where companies can list. We are very proud of the fact that, you know, in 2015, we've had 75% win rate of the IPO market. The IPO market's been a little choppy this year, especially been choppy for tech. So the tech deals that have gone out have not really performed that well. But we have 2 months left in the year. This week, there are 9 IPOs on the calendar in the U.S., 6 coming to NASDAQ, and we hope they'll perform well so that we can get a few more out before the end of the year. We also are very proud of the fact that I've been at NASDAQ 17 years, and one of my goals when I joined NASDAQ was to get companies to switch from the New York Stock Exchange to NASDAQ. Companies that really were associated with the brand of NASDAQ, that were growth companies, were more innovative, and we've had great companies like American Airlines, Walgreens, Vodafone that has made the switch from the New York Stock Exchange to NASDAQ in the last 5 years. We are the home of tech, though, and we are very proud of the fact that 60% of the tech IPOs in the last 5 years have listed on NASDAQ. These are great brands like GoPro, FireEye, that have chosen NASDAQ. And when you look at the number of public companies in the U.S., we have 73% of the technology companies. And I'll get to why that matters for companies in this room that might be looking for an IPO. You know, I've been working with listed companies for over 17 years, and in the last several years, we have definitely seen a lot of companies outside of the U.S. looking to list on NASDAQ, especially tech companies and biotech companies. And they're listing, you can see here, because of the fact that they get better valuations, they have higher multiples, they have greater volumes, greater liquidity, greater analyst coverage. And so we really do see that the benefits of a U.S. listing for a tech company is something unique. I talk to CEOs all the time. They will tell me they don't want to go into an investor meeting where they have to explain what a SaaS business are, or what a digital ad campaign is, or mobile campaigns are. They really want to talk to investors that understand their story. And that's one reason we're attracting a lot of great companies to the U.S. market. But one thing that we've noticed, and probably all of you have noticed over the last few years, is that companies are staying private long. We have this huge pipeline of, I call them unicorns, some people call them decacorns, great companies like Uber, Airbnb, Lyft, Slack, all these great brands that are out there, Stripe, all these brands that are these huge companies that have really raised a lot of money in the capital, in the private rounds. So I get asked that all the time. People ask me constantly, are we in the bubble territory again with these high valuations in the private rounds? I think that's the big difference. I was at Nasdaq in the late 90s when we had the dot-com crash. And at that point, you weren't seeing large investors, Fidelity, T. Rowe Price, Wellington, making very large investments in these companies. So today, that really is the big difference. You're seeing institutional money that's coming into these private companies, and they're investing early. They feel like the only way they can beat the indexes and get ahead of the game is by investing in these private companies. And that's really allowing these private companies to take that money and grow their businesses. So you're seeing the IPO market and the companies that come to the IPO, they're much later stage companies. They usually have higher revenues than we saw back in the late 90s. Some are even profitable. So it's just a very different market than what we saw in the late 90s. But we see this huge pipeline. I think because of the volatility we've seen in the market, a lot of the deals that we're going to go in fourth quarter of this year are postponing to next year. So if we'll see what happens with the Fed and interest rates in December, but if the rates remain relatively low, we do think the IPO market will be strong in 2016 in the U.S. because at the end of the day, interest rates are still at all-time lows. The best place to put your money is in equities to get a return as an investor. This just kind of highlights what I was just talking about as far as the fact that the amount of money that's being invested in late-stage capital is just huge. You hear from VCs, they'll talk about they really don't like the fact that these companies are staying private longer. Nasdaq is really looking at how can we, instead of saying we don't like they're staying private longer, we're saying how can we help them as they're staying private longer, and I'll get to that in a minute. But what we are seeing is that these companies who are now raising huge amounts of money in the private markets, they're actually acquiring companies to help grow their businesses. So we're seeing startups buy startups. I think that's a unique phenomenon that we've seen in the last couple of years that we didn't see back in the late 90s. So what are we doing to support growth companies? One of the key initiatives that I've been working on, and we really see it as part of our mission at Nasdaq. So when we think about all the great companies that I mentioned, Apple, Google, all these great companies started with entrepreneurs who had a great idea that they started in their college dorm room or their apartment, and they found investors, and they brought that company to Nasdaq, and I've hosted many of those CEOs at opening bell ceremonies, and these are the entrepreneurs that really make up the Nasdaq family. So we really feel like it's part of our mission is to help educate the next generation of entrepreneurs. So we just launched this in September. It's a nonprofit center dedicated to promoting entrepreneurship. So you can access it at NasdaqEntrepreneurialCenter.org. We will have webcasts and seminars that will really speak to how to raise money, how to raise seed capital, we have media training on there for startups. We have startup law. We have managing your cap table. We have stock plan administration. Anything you really need to know as you get into early stages of starting a company. We have digital media training. There's a lot of great programs that are on the site. So I do encourage you, if you're a young entrepreneur and you're wanting to learn from other entrepreneurs, to go to our website at the Nasdaq Entrepreneurial Center. And if you're in San Francisco, to definitely stop by the center. It is open to the public. One of the other things that we've really been working on is because we have seen all these companies that are staying private longer, is how do we really help those companies with their liquidity needs? In the Bay Area, one of the biggest challenges for a technology company is retaining talent. And what you'll see a lot of times is engineers will see an IPO that's about to go public, they've recently filed, and they'll jump to that IPO because they don't know when their company is going to go public. So we've really worked to help address that need with the Nasdaq Private Market. We launched the Nasdaq Private Market about 2 years ago, and we're helping companies with liquidity, and a lot of times it is where they have one of these large institutional investors like a Fidelity or T. Rowe Price or Wellington, and we're helping them provide liquidity to those employees so that they can buy houses, they can buy cars, they can finance children's education. And that's been a really great platform for these companies. And I would say with the recent run-up of all these companies raising money in the private rounds, we feel like that's a great opportunity for us to add value. We just closed on a transaction where we actually bought Second Market, which was the other private market platform in the U.S. And that makes us really the #1 leader in the space as far as helping companies in the ecosystem of having liquidity for private companies. The other thing that we did about a year ago was we bought a company that does cap table management. As we were looking at all these private companies, and many of you who have companies in the room, you may do it the same way. You're managing your share registry on a cap table with your law firm. We thought you could do it better, so we bought a company called Exact Equity, and now we have a software solution for companies to use to manage their share registry. And obviously that helps us that when you are using your share registry with us, with Exact Equity, and you want to do a liquidity program, then we can help you with that liquidity program to give your employees some liquidity before you go to the route of an IPO. So we really think it's kind of the new norm. Companies are staying private longer. I think you have to kind of look at what's causing that. The Jobs Act in the U.S. was passed. You went from having 500 investors to 2,000 investors before you had to go public, and that's not including employees, so that did allow companies to stay private longer. You allowed the ability for companies to go out and test the waters, so you can go out and meet with investors before you go public. I think that's given companies a lot of great feedback from investors on what they're wanting to see before they go public. So the companies do go public, they understand kind of what they need to do to meet their investors' demands. So all these things are good for the private market, and I think ideally it will create is better public companies once they do go public. So with that, I will take any questions. It's the end of the day, so if there are any Q&A, I will take those. If not, you can grab me at the bar, and I'll probably answer more questions. But I do have one here in the front. Yeah.
Well, you need that, yeah.
I'll review it.
My big question is, because technology is becoming more prevalent, all right, as technology becomes more prevalent and even people are changing the way they do business, etc., Nasdaq, do you think it'll still be relevant in tomorrow's world with crowdfunding, with the new kind of analytic tools that allow people to say, okay, I'm going to invest in this company and not invest in this company, and all the software that's available today that actually puts the person...
Yeah, what a brave question to the Vice President of Nasdaq. So yeah, it's a good one.
No, that is a good question. I think one thing that Nasdaq has learned from dealing with all those innovative companies over the years is we ourselves have to stay current and be innovative. So people don't really realize that Nasdaq itself is a technology company. We're categorized as financial services, but only a third of our revenue comes from trading today. We sell our technology to 80 exchanges around the world, including Istanbul Stock Exchange. We have services that we provide to companies to help them, whether they're private or public. So IR services, public relations services, corporate governance services. But we ourselves are continuing to innovate. We just made an investment in a company called Chain.com. So we believe blockchain could be the future of how we actually clear and settle stocks as we go forward. So we're never going to rest on our laurels. We're a public company ourselves. We're very proud of the fact that we're public. We have over $2 billion in revenue, and our goal is to continue to look at ways to innovate in the trading space, and I think you'll see us do that. Thank you.
Thank you. Some other questions? Well, thank you all, those who survived that late. Bruce, thanks a lot for being with us. I'm so happy that you managed to come. I know that all the precautions you took for your own personal safety. It's such a pity that we didn't give you the full room here at that moment, but thank you very much and appreciate being here.
My pleasure. Thank you. Thank you.
So, thanks for you. Who stayed here till the very last moment. I will be seeing you later on with the party place, and yeah, you can bring people that you want to bring with you, and let's party together. It starts at 10 o'clock at Suada, and you should not miss that party. Bye, thanks, see you later, and see you tomorrow.